is IBM CEO Arvind Krishna. Arvind, good morning. It's great to have you. Your stock is up, which is a good sort of thumbs up by the market on this $11 billion deal. Talk about why Confluent and why now?
Yeah. First, good morning, Sarah. It's great to be here. And we are super excited about Confluent. Look, I think we'd all agree data, and especially real-time data, is incredibly important to how an enterprise functions. Nobody can live with a month-old data or even week-old data, and Confluent has the most capable technology to unlock the real-time value of data across all the myriad of applications, clouds, and other APIs that they all deal with. So that's kind of why Confluent and why now. And then next, as AI agents enter the enterprise and they need to get access to all that data, Confluent is going to give us a great way to open up the AI agents getting access to all the data, but in a controlled way.
So where does this sit? Where's it going to sit within IBM? How do you think? It's clearly part of your software business, which has been growing. Is it within Red Hat? How does it bolster what you've already got going there?
It's actually going to sit within IBM software all in, not within Red Hat, but within the segment that we call data. So, and the reason for it is that if everything is only open source, is all going there, and is aligned with how the Red Hat and Linux sales team works, then Red Hat would make sense. But we believe that we're going to get incredible go-to-market synergy through the IBM software sales team, and so this is going to sit within our data segment in software, and also the nature of the recurring revenue in the business is very, very attractive from a financial perspective.
Yeah, I wanted to ask about that because the stock has been under pressure, Confluent that is, over the last year, really since, it peaked above $90 per share after going public in 2021. I know it's still growing double digits and has recurring revenues, but it was growing into the IPO like 50, 60%. So why are we seeing declining revenue in that business, and is that a concern?
Not declining revenue. Look, as things get bigger, it's a lot easier to grow 50, 60% when you're at 200-300 million than when you're at $1 billion. They're at $1 billion and growing at about, call it round numbers, 20%. And that's a very attractive this thing. Now, I think that the synergy we bring in is really across both. It's synergy at IBM, but it's also synergy for Confluent. We can take our go-to-market and help them get into markets where it may have been very expensive for them to go on their own. So that is go-to-market synergy. But we can also open up more money for R&D and innovation by leveraging our G&A and our fixed cost structure, treasury, payroll, ERP, all those things. So we can kind of bring that as synergy so that Confluent can actually invest more and be even more innovative and really take advantage of this AI opportunity that's in front of us. I think much as we did with Red Hat OpenShift, I think we'll be able to increase the growth rate for Confluent going forward and also get it much more into many more enterprises than they might have been able to on their own.
I cover your growing book of AI business every quarter. We talk through it. You've started to quantify it. So with Confluent now in the portfolio, how should investors think of IBM versus some of the other AI stocks, the Oracles or the Microsofts? You guys are all going after enterprise customers, but doing different things.
Right. So if I think about the Oracle, that's much more of an infrastructure or data center play. That's not what we are incredibly focused on. So I would sort of say that's different. It could be that where Confluent runs, maybe actually on top of Oracle, and also getting data access from Azure. So Microsoft has got a play both in models and also in the data center. We are much more on going to our enterprise clients and saying, we want to help you get value from AI. Your one application may be sitting in Azure, another one could be in ServiceNow, a third one could be in AWS, fourth, fifth, sixth could be still in their own data center. How do you unlock data from all this so a single AI agent can then act on this data as appropriate for the enterprise? That's kind of how we play. So I think of it really being complementary to all the others and actually adding value to them, not trying to take away from their market and their value.